Hi everyone, this is your lecturer John, and welcome to our discussion of Module 1, Introduction to Accounting Principles. Module 1 is divided into various sub-modules to highlight or focus the interrelated concepts under this topic. For the sub-module 1.a, we will focus our attention on the fundamental business model and its relationship to the differing needs of the users of financial information. And at the end of our discussion, you should be able to understand the importance or role of accounting in addressing that need for financial information of the various stakeholders of a business. So to start, let us discuss the fundamental business model and its relationship to the users of financial information. The picture that you see in the slide shows how a business can be set up or financed. So one mode is that a business owner may infuse his or her own personal capital to finance his or her business venture. In the case of partnerships, the partners may agree to contribute their money, their property, or their skills to put up a partnership business. Or in the case of a corporation, it may sell shares or stocks to the public to raise capital. The other modality is that these businesses may complement or augment their capital by borrowing financial and other resources from various creditors or lenders, such as banks, other financial institutions, or other providers of capital. While raising capital may seem very simple, we should recognize the fact that when making investing and lending decisions, these two groups are actually taking risks. That is, in making decisions to invest, it is important for the owners, as well as potential investors, to have sufficient financial information for them to make sound and informed investment decisions. That is, whether they should hold, increase, or decrease their investments. Same with the creditors and lenders. They certainly need financial information as basis in evaluating the business creditworthiness before they can extend loans or financing to the borrower. So when a business capital is already raised, cash investments can be converted into another type of asset. For example, the company may acquire property, plant, or equipment that can be used in the business operations. That can be true for a manufacturing business, which may decide to build up a plant and buy equipment to convert raw materials into finished goods. If the company is in trading or merchandising business, cash investments can also be used to purchase finished goods, which can be sold at a profit. A service-oriented business can also use cash investments to pool resources before it can offer its services for a fee. However, whatever type or form, doing business entails the incurrence of expenses and other operating costs, such as salaries, rentals, utilities, etc., to generate revenues. At this point, different groups of people or organization may be interested to know about the financial health of the business. For instance, employees are interested to know about the entity's ability to pay salaries and wages and provide long-term employment benefits. The business suppliers also rely on financial information to appraise the economic soundness of customers, especially those they intend to deal with on a long-term basis. If the business is renting a space, the lessors are also interested to know about the financial health of their lessees. Of course, they wanted to know whether their lessees can pay them as their rent becomes due, and whether they can sustain their leasing commitments. So the combination of these elements provides the revenue stream for the business. As such, other stakeholders with very specific financial information needs are also taken into consideration. First are the customers of the company. Well, customers are often interested about the financial information of the company they are dealing with, to determine whether it offers useful products at fair prices. Customers also ask questions that delve into the company's ability to survive long enough to honor its product commitments, for example, its product supply and their warranties. Second is the government. The government, because as part of its regulatory function, the government is also interested about financial information of the businesses operating within its territorial jurisdiction. For example, if the company is a public utility that operates in a certain locality, for example, such that of Meralco, Maynilad, and the like, the government needs financial information to evaluate whether that public utility is charging a fair rate for its services. Or with regards to the government's mandate to raise revenue through taxation, the government needs financial information to determine whether companies pay their taxes correctly. And last but not the least is the general public. The general public, because various people and groups or the members of the general public also have varying needs for financial information. Oftentimes, the media and other advocacy groups look into the financial statements of various companies to obtain information about their policies, their commitments, their programs, etc. We could think of an example. For example, a labor and environmental advocacy group may be interested whether the company is providing useful products and gainful employment for citizens without causing serious environmental problems. And these are oftentimes available as disclosures about the corporate social responsibility efforts of businesses. And all of this, no matter how theoretical they may seem, are aspects that highlight the importance of financial information to different stakeholders of a business organization. So what can we conclude of our discussion? By discussing the fundamental business model, we can agree that decision makers have varied financial information needs regardless of the type of business, whether that is service, merchandising, or manufacturing concern, and also regardless of the form of business organization, be it a proprietorship, a partnership, or a corporation. And that need for financial information can only be filled in or provided by accounting. Well, accounting as a system, it analyzes and measures the activities of the business. It processes that information into reports and communicates the results to decision makers. And since accounting quantifies business communication, it is often referred to as the language of business. Actually, accounting can be used to evaluate past or historical performance of business entities, and the result of that evaluation can be used to intelligently predict the future, which can guide decision makers in making informed and sound business decisions. But the question that remains is that what exactly is accounting and what are its different branches? That will be discussed in the next module.